What's good, everyone? It's Eric. Today, I'm going to show you probably one of the most A plus and clean setups that I've had this week, which was on Thursday, August 14th, 2025. And you can see on the screenshot as well, proof on my Top Step account that I took this trade. And one of these trades, or trades like these, are trades you have to catch or capitalize on in order to become a profitable trader. On a day like this, the move is extremely clean, extremely obvious, especially if you trade ICT. So in order to become profitable or even just maximize profits, you have to be able to make money, large sums of money on these days, and on choppier or more low probability days, avoid trading or avoid even looking at the markets then. And if you check my Discord as well, this is in the private section, which only my mentorship students have access to. You can see I analyze straight in the morning, looking for longs to PBI high or the daily high, and kind of showing my position as well as it's playing out. And eventually as it hits take profit. Now let's get right into the analysis. So looking straight at Forex Factory, we can see Thursday we have PPI and core PPI as well as unemployment right off the bat. The numbers seem to come out pretty good, but remember, news does not always correlate with price. So the news could be good, but doesn't mean price is going to go up, at least in a shorter time scale. Longer term, probably, but as traders, we're only in for like looking at the markets for at most 1 to 2 hours. So we just care about capturing some sort of trend within the market. Now, if we look at 8:30 in the chart, we can immediately see on the 5-minute chart on ES, so S&P 500 futures, large dump occurs and sweeps lots of sell side on the left. So draw out all these, all these levels like so, right? Sell side, sell side, sell side, which sets us up for a market maker buy model. Obviously, if we get that market structure shift or some sort of confirmation of reversal. Now, looking in the market around 9:30 and 9:40, that's when I kind of hop on the charts. We can immediately see, yes, we've swept some sort of sell side. We draw like this. So there's potential reversal, but it could also just continue pushing downwards. And if it did continue trending downwards, then that's the place where I would be looking for shorts. But we can see we have a market structure shift on the 5-minute. So 5-minute candle close, we mark that out as a market structure shift, which has appeared on NQ and ES. So market structure shift here. It's just blatantly obvious. You should be able to see that pretty much immediately. And now we have our downtrend from the PPI candle, this downwards move. We are downtrending, now we have a market structure shift. What does that mean? That means now our downtrend has reversed or is starting to reverse and now is an uptrend. So when our uptrend, we only be looking for longs. And this is how you approach the first step of my strategy, right? The 3-step strategy. I have another video on it, my YouTube channel, which I'll link if you want to see it or are not very familiar with it. Very similar to Silver Bullet. And first step is drawing liquidity, which is determining where price is going to go. So we know already, based on the market structure shift, we're only looking for longs. And in terms of where we can target as our drawn liquidity, we can look on the left of our chart. Where's the most obvious draw? Well, the only thing that's obvious here is PPI high. This is just a large liquid void. Really, there's not really a place to just reverse randomly. And if you look at the 1-minute chart, sure, you have like this large 1-minute fair value gap, but it's really the only obvious target is PPI high. And if you don't know, data candles their highs and lows can be used as draws of liquidity as well. So now that we only know we're looking for longs, right? All we have to do is look for bullish fair value gaps or BISIs. So we can see I usually trade closer to 10. On this specific account, I'm not limited to the time, but usually it's 10 a.m. to 11 a.m. We form a 5-minute BISI or bullish fair value gap at 9:45. So now I'm looking for a retracement into that to long. And with my strategy, I use a 4-point stop loss and a 16 or variable take profit. So minimum, you want a 1-to-1 risk to reward I would say 1-to-1 is good, so risking 4 points for 4 points, or having your TP at 8 points, 10 points, 12 points on this specific day. Based on market experience, I think we could have reached the full take profit of PPI high, which is 16 points. So I traded with 2 ES cons, which is why I hit for $1,600. Now, on this specific day, I want it to retrace into a fair value gap, right? So I see we have a 1 minute untapped bullish fair value gap, and market kind of started running without me. And this is where you really want to be careful. Now, if you trade the highest fair value gap always, and that's part of your strategy, and you backtest it works, then you can go right ahead and do it. But in this specific case, if you've done that, then you would have been stopped out. But of course, if it's within your strategy and it's profitable, then this is a good loss to take, right? You'd want to take this trade. But for me, I like to wait for higher time frame fair value gaps to get mitigated or tapped into first before actually entering. So to get in with a larger pullback or some more confirmation, essentially, which is kind of what I did here. So I waited for us to retrace into this 5 minute bullish fair value gap that we've tapped into. Now I didn't want to enter immediately. I wanted to retrace up a little bit just to make sure we're respecting the fair value gap. And to not get stopped so quickly, because if you're trading with 4 point stop, it can be a little bit tight sometimes. And in this specific case, if you just jumped in at the top of the 5 minute fair value gap, you would have been stopped. But I waited a little bit for it to spike up, and then I believe around 9:56, I hopped in the long, and then take profit at PPI high and just kind of let it ride to take profit, which we eventually hit around 50 minutes later. Now, one thing to note is that actually the NASDAQ, we kind of had an SMT divergence. So let's say, for example, you longed here and you're targeting PPI high, right? ES and NQ, they're correlated, but when one of them hits a key level, it could reverse, which is why SMT divergences occur. If we look when NASDAQ hit the 8:30 high, it's around 10:30, which means there's potential for a reversal off that point. And a reversal on NASDAQ, even though ES hasn't hit that high, this reversal on NASDAQ can cause ES to reverse. So that's why it's always important to look at both the S&P and NASDAQ, even if you're only trading one of them, which for me, I only trade S&P 500, but I still have to analyze the NASDAQ to look for these SMT divergences. Now, I had confidence to hold for the full take profit. And if you do so, you need to be okay with, if it retraces and you're maybe $1,100, $1,200 in profit, you have to be okay with it retracing and maybe hitting your break even or even taking a loss. For me, I would go break even after it hits that potential SMT divergence point at around 10:30, which is when NQ hit PPI high. But I was okay with that, accepted the risk, and held to the full take profit, getting us 16 points and essentially giving us 4 more trades of buffer. Because at 16 points, I risk 4 points per trade, right? I'm okay for another 4 trades if I lost another 4 in a row. But key idea is that when we have a day like this with clean price action, like this is a day you really want to be able to read and capture, somewhat of a good move on at maybe like a 2-to-1. If you catch a 1-to-1, that's okay, if that's within your strategy. But ideally, I think 2-to-1 or something like that, or even greater, which would be good, not necessarily better. But winning on a day where price action is very obvious, you have to capitalize it on it. And really, that's how you become a better trader or even a profitable trader if you're struggling. If you're struggling, chances are it's not because you can't analyze a chart. It's probably because you're not able to capitalize on strong and obvious trending days like this, and maybe on more choppier days where market's not clear or it's more violent and you'll get stopped out pretty easily. You want to avoid those bad days and be able to catch really good days like these. And that's really the key to trading. It's not trading more, it's capturing these obvious moves and these large trends. With trading in general, even if you're trading ICT or supply and demand, the basis of it is capturing a trend. Even for those that are trading like inverse fair value gaps or reversals, you're still capturing a trend. It's just a reversal in the trend. So make sure you're able to read a day like this. And if you aren't, I highly recommend going back and back testing, getting more time on the charts, making sure days like these where you have such an obvious draw, you're able to hit. But with that, once again, like I showed all my positions and my analysis as well as I do every morning in my Discord. So if that's interesting to you, I'll leave a free invite in the description. And if you're interested more in mentorship, which I only show the analysis in my private circle with the mentorship, I also leave a link for application there. And one more announcement is that I received a discount from Apex actually that I want to share with you all. So if you use code Feng, you can get any 80% off any eval. So eval that's like $200 you could get for like maybe like around a McDonald's meal, which is pretty crazy. But I'll also leave a link to that in the description. But with that, I hope that you found a lot of value from this video, and let me know if you guys want to see more market analysis like these.